Hey y'all, how y'all doing? So today we are going to look at understanding market balance and imbalance. And if you're in my free Telegram group, you will constantly hear me saying the market's in consolidation, the market's in consolidation, the market's in consolidation. And that's because honestly, about 80% of the time, the market is in consolidation. So let me explain why it's in consolidation so much. So hopefully this will clear up some misunderstandings in the market and hope you get a clearer picture of how price moves. Market balance and imbalance on every single chart you will look at. So this is not specific to just a stock chart. It's any chart. So the first thing I want you to understand is the two states of being balanced and imbalanced is we're going to look at balance first. So a balanced state is when the market is trading sideways. This is the consolidation you see. And so when it's trading sideways, neither the buyers nor sellers have control. And the smart money, the people with the money that move the market, they are deciding basically who's going to take control, and they are accumulating orders to go continue to go up or to continue to go down, depending on which way the market is moving. So you need to understand the trend of the market to help you understand where what's happening in the balance. It's usually they are just collecting orders to move down, as in we were in a downtrend here, and then collecting orders to move up in the uptrend here. So anytime you're in consolidation, you are in a balanced state. So the imbalanced state is the big, huge impulse candles. So those are your big, and this is Google. I'm on the 1 hour. So this candle is $3. This candle is $4. This candle says 16 cents. I don't know about that. That candle is $5. So these are your big, huge candles. So notice after we get one of these big candles, price starts to consolidate. We get a big candle, price starts to consolidate. We get a big candle, price starts to consolidate. So, and the consolidation is the balance. The big candles are the imbalance. So, the imbalance is the side where one side overwhelms the other one. It creates a strong move in one direction, which you can see. And you'll often see these large candles with either no wicks or very small wicks. And these candles often create your fair value gaps. And so we're going to leave that for another time, but just make sure you know that and you can note that for a different video. So basically, the balance is price consolidates to build orders. And we're going to turn the balance back on. So this is where we're building orders. The imbalance is where price breaks out, leaving a strong inefficiency behind and your fair value gap, and then we rebalance. So this cycle shows basically how price just moves through, and anytime the market is excuse me, imbalance, you are going to get a move back to balance. So anytime we get an imbalance move, we see price pull back into that, create another imbalance move. We see price pull back into that, and here we're changing directions. But now we get an imbalance move up. Price consolidates, which is balance. It pulls back into there and pushes up. It comes back and rebalances and pushes up. So the market is just constantly, I'm going to move this up. The market is constantly just going from one state to another. So balance, and this is the pretty way to make it look. And then we go higher. Obviously, it doesn't look that pretty in the market. It's not so even and, easy to see. Sometimes you really have to pay attention. So notice anytime we have a big up move or big down move, we are going to go back and rebalance. So we're going to consolidate, which is why I tell you the market is in consolidation about 80% of the time, because it is. As you can see, we are there's more candles in consolidation than we have imbalances on this chart. So anytime you see a big up move or big down move, look for a point of consolidation and for the move to continue either up or down, depending on which way it's going. And there you go. So that is how the market balances, and it goes from a state of balance to imbalance. And I don't care what chart you are on, you will see this type of movement. So your job is to go and look at a chart, and you can be on any time frame you want. You tend to see it a little bit easier on the 1 hour, maybe 15-minute, 30-minute. But start looking on the 4 hour, on the daily, and see if you can spot that balance imbalance on the daily, on the 4 hour, on a little bit of the higher time frames. And that may help you be able to catch some of the moves that are happening in the market. Because if you know we're in a downtrend, this is a balance, this is basically a rebalance of this fair value gap, you're looking for a down move. So, does that mean we're trying to predict the market? No, we're not trying to predict the market. We are still trading probabilities. If I am going from an imbalance to balanced state and this is my rebalance, I am looking for it to continue to go down. So you are still trading probabilities. You are not trading, factual, actual things that are going to happen. You are trading what is the probability of one thing happening over another. So start paying attention to the balance and imbalance state of the market and seeing if you can take trades that are more on your side and that you are able to potentially profit from as they move in between these states. All right. I hope that was helpful. Talk to you guys later.